What if I told you there's a trader out there who built not one, but $2 billion companies by doing the exact opposite of what Wall Street tells you to do? This is a guy who lives for the chaos, makes hundreds of trades a day, and believes the key to success is something most of us are absolutely terrified of. Okay, let's dive into the playbook. Yeah, that's Tom Sosnoff. And right off the bat, you get a feel for the kind of intensity we're talking about here. This is not your typical buttoned-up CEO. He's a self-proclaimed junkie for the markets. And you know what? That obsession is what made him a legend. So who is this guy? And how did his approach just completely flip the world of retail trading on its head? Let's get into the story of this billion-dollar junkie. I mean, just look at this timeline. The scale here is just, wow. He starts in the old-school Chicago trading pits, builds Thinkorswim, sells it for nearly $1 billion, and then what does he do? He turns around and does the exact same thing again with Tastytrade, this time for over $1 billion. You know, that's not luck. That is a playbook. But you gotta understand the engine driving all this. It's not just a love of trading. Sosnoff himself says he's a workaholic, that he's never satisfied. He's pretty open that this kind of drive means you sacrifice a lot. Family, friends, a social life. But for him, it's that constant motion, that relentless need to build something new, that's the real fuel. Okay, so let's get into how he built these things, because his business philosophy, it's just as wild as his trading style. He calls it the goodwill model. And honestly, it was designed to be a wrecking ball to the traditional financial industry. And this chart just lays it all out, right? On one side, you have traditional finance, where everything's a big secret. On the other, you have Sosnoff. He absolutely hated what he called the garbage from financial media. You know, all those experts giving their hot takes and useless opinions. So he did the exact opposite. His whole philosophy was, div it all away. Tell people everything you know. Base your content on actual math and probability, not some gut feeling. He was betting that if you genuinely help people get smarter, they'll stick with you. And, well, it worked. Twice. All right, so that's the business model. Super radical. But what about his actual advice for people trading in the markets? Well, get ready, because pretty much everything you think you know is about to get turned on its head. Okay, this might be the most shocking thing he says. Everyone, and I mean everyone, tells young people to play it safe, right? Put your money in a retirement account, don't touch it, don't take risks. Sosnoff says that's irresponsible. He actually argues you should get in the market even with just a couple $1,000. And yeah, even if you lose it all. Why? Because that experience, that lesson, that's the real prize. But look, this isn't about being reckless. It's a very specific framework. Number 1, get active. You have to be in the game. 2, trade small. This is key. Keep your position sizes tiny so that no single loss can ever wipe you out. 3, trade often. You want the law of large numbers on your side. And number 4, the big one, focus on longevity. The goal isn't a huge win tomorrow. The goal is to still be trading next year and the year after that. Now, Tom is super clear about this. You, as a retail trader, will never have a statistical edge over the big Wall Street firms. You just can't. But, he says, you can get what he calls a mechanical edge. And no, this isn't some secret formula. It's all about mastering the mechanics, knowing exactly when to take a profit, when to cut a loss, how to size your positions. It's about optimizing your process to tilt the odds just a little bit more in your favor. All right, now for my favorite part. Let's just rapid fire through some of the biggest myths in trading and watch Sosnoff just demolish them with his classic blunt style. First up, this one's a classic. The idea that powerful politicians, like Nancy Pelosi, are using some kind of secret inside info to get crazy rich in the stock market. And boom, there's his answer. Absolutely no room for debate. Sosnoff's whole point is that even if you had the Fed's meeting minutes a day before anyone else, you still wouldn't know for sure how the market would react. The market is just too chaotic, too complex. Believing anyone has a crystal ball, he says, is just, well, you heard him. All right, next up, this is the big one. The dream that gets sold to every new trader on Instagram and TikTok. Taking a tiny account, a few $1,000s, and turning it into a massive 9-figure fortune. Can it actually be done? So in his entire 40-year-plus career, dealing with literally millions of retail traders at Thinkorswim and then Tastytrade, Sosnoff says he's seen fewer than 10. Just 10 people turn a small stake into something like $50 million or more. The odds are they're basically zero. And here's the real kicker. Chasing that lottery ticket is the #1 reason traders fail. It makes you trade way too big, take ridiculous risks, and then inevitably you blow up your account. So what's a realistic goal? He says aim for 3 to 5 times the risk-free rate. You know, what you'd get on a super safe government bond. If you can pull that off consistently, you're an absolute rock star. And finally, let's talk about the holy grail for so many traders: charts, technical analysis, all those lines and patterns. What does Sosnoff think? He thinks they're ridiculous, utterly meaningless. He says when he first built Thinkorswim, he didn't even want to put a charting package in there because nobody he knew on the actual trading floor used them. Why? Because the past doesn't predict the future. Simple as that. So, if it's not inside info, not lottery wins, not squiggly lines on a chart, then what is the real key to success in all this? Let's tie it all together for the final, most important takeaway. This is it. This one sentence is basically the entire Sosnoff playbook. Wealth creation is a derivative of longevity. You don't get rich overnight. Real, lasting wealth is a side effect of simply staying in the game long enough for your experience and the magic of compounding to do their work. It's all about survival. And that's why the real profits from trading aren't always about the money. The act of being an active trader literally rewires your brain. It forces you to learn how to handle risk, it speeds up how you process information, it makes you incredibly decisive. These are skills that go way beyond your trading account. They make you a better entrepreneur, a better problem solver. They make you more effective at, well, life. So we'll leave you with this final thought. Coming from one of the most successful traders and entrepreneurs out there, the biggest risk isn't losing a bit of money. The biggest risk is being so afraid to lose that you never learn how to take a risk at all. So you have to ask yourself, are you playing it too safe?